Traders, welcome back to my YouTube channel. I'm going to walk you through today's price action using price action rules, but I would like to start with highlighting important trades that you have to have as a trader to acquire consistency in a market like this. The very first thing I need to do is I want to identify the overall market structure. So I can see that the structure is trend range, but what is the main bias inside of this trend range? Because there is a bias even inside of trend ranges. Well, I can see that every single major high is lower than the previous one, which is confirming the fact that we have bearish imbalance and we are leaning more bearish, and we expect for prices to eventually reach the low of the day. But it is not what I want to start with. I want to talk about this consolidation, because this consolidation is the structure you would start today's session after the market open. And as you can see, it is very unclear. The bias is very neutral. The 21 bar expansion moving average is exactly in the middle of these bars, and it is tempting to both buy and sell at the same time. This type of structure needs to be traded differently than other types of structure. When you're observing a structure like this, you need to be fully objective and you need to be honest with yourself. Not taking a setup is an important skill that you need to master, and it is as important as to be able to identify the proper places on the chart where to enter and to identify a high probability setup. Because not every single time the market is going to confirm to your strategy and give you the setup, the structure you're expecting. And this is the exact type of structure that gets a lot of traders in trouble. And I understand, because maybe you're a new trader. If you're just beginning, you're excited to trade, you're excited to get the experience. So you're looking for setup on every single candle. But you have to get rid of this mindset, because in order for you to identify a high probability setup, you need to make sure you're comfortable and you're reading the structure correctly. You want to know exactly what is the main context. You want to have your key entry point down right, or at least have an idea where the key entry point may be, and the setup needs to be high probability setup, preferably without too many conflicting variables. And a lot of traders, once the market opens, they start looking for setups on every single candle. Maybe you just passed your evaluation account and you're ready to make some money. You're ready to get more experience if you're beginning. And I understand, I was the same way when I started trading. But once you get burned multiple times by just gambling, by taking setups when the structure is not really there, it will make you more patient and you will mature. So, and I do this all the time. When I'm watching a structure like this, I'm being very honest with myself and I'm being very objective. And a lot of times I tell to myself, hey, I don't know what's going on. I have no idea and I don't want to be gambling, and you need to do the same thing. It is an important skill that you want to learn, and it's nothing wrong not being able to understand what the market is doing in particular area. Since we are intraday traders, there's going to be plenty of structures and setups presented to us. And just because I don't know what's happening here during these 30 minutes, that doesn't mean that I'm failing as a trader. It means the opposite. Being patient is actually going to bring more benefits over the long run. So once you're observing structure like this, when it is tempting to both buy and sell at the same time, maybe you see the good bars. A lot of times the bars are very tempting. You see the good momentum, but good momentum and good signal bar means nothing if the context is unclear. Okay, this is neutral bias. So when I'm watching this, I'm just completely laid back, letting the price action develop. I'm not even going to try to guess, because you can get trapped in both ways. You can get trapped and you just want to be patient. You don't have that many static lows and highs. The highs are fairly static, but you know, you have bearish imbalance, so you're not really sure. So just remember, master the skill to be patient and to be honest with yourself. Where you're not sure, don't get the emotions and the excitement get the best of you, because you may have a bad losing trade while you want to save those losing trades for actually good setups that have higher chance of succeeding. So once I'm watching structure like this and we are breaking lower and we're failing to break the resistance, this is confirming the bearish imbalance. And notice we have a new high, first entry long, pullback, second entry long, failure, which would be a high probability setup. But the bias is still unclear. We may go back into trend range, so I'm just going to be patient. And notice prices are trending lower. And we keep pushing all the way down here. So this means that this downtrend is gaining significance. So I need to redraw a brand new downtrend again, because we have moved so far down for only this downtrend to cover this price action. So according to price action rules, the trend is down. And I'm only thinking about selling. If you're going to be buying, picking the bottom, you're going to get trapped. So I want to sell a two-legged pullback, second entry short at the key entry point. But as you can see, the market already created the break and a new extreme without even offering a pullback to the EMA. So I'm just going to watch how EMA is reacting, and notice prices are completely slicing through the EMA. So what I need to do since there's always a pattern for these candles, even though I'm relying on pure price action, these candles are always following some pattern. So I'm going to draw this channel. What is the bias? Shorten bias is bullish. This trend is in play. And since the overall structure was still quite rangy, this is very sideways price action overall. I'm not really drawing wider downtrend. In fact, you can see if I'm going to look for some variation of a measured move, it even offers me a perfect measured move around this area. So you have a larger two-legged pullback. So let's see what's going to happen. Given this strong bullish shortened trend to the upside, I'm leaning more bullish. But we already have a break in new extreme. So I'm going to mark my new extreme again. We have a second entry long. Can I take it? I cannot, because the shortened downtrend is in play. And we just had a small break and a new extreme. We have a new high, first entry long, pull back, second entry long. And I was actually looking for failed second entry long, but I wanted to see push below EMA first, because this was quite a substantial push up and we are still above the EMA. I cannot really take a failed second entry long like this. I want to see at least push below EMA to confirm the bias is bearish and lower high, but it didn't happen. And notice what happened. We formed another bullish bar, double trap, push above EMA. So this is telling me that the bias is changing. EMA is holding again, and this bar looked very bearish, reversed back up, and also you can see the market is forming small support, which means buyers are in the market, and this is a great tier 1 signal bar, bullish momentum, and this is actually a high-low confirmation setup. So this was the first trade for the day that I actually took, because I was leaning a little bit more bearish, but the fact that you push back above EMA and then form high-low, which confirmed the double trap and overall confirmed the bullish bias, this is now the proper confirmation for me to trust that we're going to continue working higher. Work for a scalp. Your stop loss goes one tick below the signal bar, so you're still able to get out if you're holding a larger target profit. And now we have new low, first entry short, pull back, second entry short failure, closing back above the EMA and above the support. Now, but notice the price action at this point, it is getting more sideways. This is some serious consolidation again, but notice how EMA is holding nicely and the support. Now when I was watching this live, it was definitely too sideways for me, but it is more aggressive trade because you have the small support, basically triple test, allowing you to combine with the failed second entry short. You know, more aggressive trader can take a potential chance here, and prices are working higher. So as I'm watching this, I'm gonna try to look for potential channel like this, because after breaking new high, you keep creating multiple pushes to new extreme. So this tells me that the bias is bullish, combined with the fact how EMA is holding nicely. Okay, we're trading higher, but we have massive overshoot and we keep trading higher. So this tells me that the pattern is probably a little bit different. So I'm going to make my channel wider like this, because it is not acting as overshoot. Instead, there's probably a wider channel, and I'm even going to draw smaller spike in a channel like this. Also, I skipped a little bit this setup. You can see there's always a reason to price movement, and this was a sideways consolidation. And notice what happened. Prices broke the consolidation, most breakouts fell, at least temporarily. We came back, tested the breakout area, and this right here is a breakout pullback setup. It didn't form that well, and when I'm watching this live, it just, you know, set up the possible channel, so it was quite hard to spot it in real time. But this is not a bad context for breakout pullback, because you can see prices broke, came back, tested it, the important support that acted previously as a resistance, and you can see combined with the EMA, decent breakout pullback. But you have to be really quick and you have to really know and trust your read. But at this point, the bias is clearly bullish, and we are looking for buy setups, but we can see prices are not even pulling back to the key entry point, to the EMA. And you can see how overbought this is. We haven't even pulled back to the EMA. This is quite steep. So what I have to do, I have to redraw the shortened downtrend, because I'm following the corrections. There's a trend line rule even for the corrections. So right now the trend is up. I just want to wait for a good opportunity for me to go long. We have a new high, first entry long, pull back, second entry long, but the downtrend is still in play. We have close outside, attempt to create new low, and we have high low. Actually, my trend line is a little bit steeper like this. High-low confirmation setup of the two-legged pullback, which is okay setup. I didn't take this setup myself because we didn't get new extreme. It was quite high. It didn't feel like we have enough room to get out. And this was so overdone and overbought. It really looked like we're going to correct a little bit longer. But this was just my gut feeling. I'm definitely going to mark it as okay setup to take because you are in an uptrend. It is a high-low confirming the second entry long. It's just the fact that it's closing a little bit high. And this is just the first leg, so we may get second leg down. You know, this was way too steep, but you know, this was just my gut feeling, and this is definitely okay setup to take. It would have ended up being a losing trade if you went for 2 points. So just one of those trades that you just brush off and you look for the next opportunity. And now we can see that we have first leg down, break, second leg down, and the downtrend created new extreme. So market likes to move in pairs of twos in price action. There's a two-legged pullback. This is why we're looking for the second entries and variations of second entries at the key entry point. Even with the break in new extreme, this means that seller's momentum is over. And what is your overall bias? Remember, we have uptrend in play, so we are not thinking about reversing the market. These are two broad legs down. The trend is up. I'm following the trend line rule, and I'm looking for prices to create new high. So I'm thinking about push above EMA and a failed second entry short. But as you can see, there is no break lower or below neither one of these bars, and we are already pushing all the way up here. So we already have somewhat of a double top. I'm also going to mark potential support because I can see EMA flattening. I have double top, strong push down. I have a high low here, but I cannot take a high low this late when the body is so far from EMA, so close to these highs. At the same time, I'm not selling. We don't have a new high quite yet. Okay, we have a new high, first entry long, second entry long, but you cannot take bar is bad. It didn't trigger. There was no trigger, so the second entry long technically formed here, which is also on my chart failed second entry short because this was the lowest point of this correction. So we have a first break lower, first entry short, little pullback above this bar indicating pullback, and we have second entry short. So these are two high probability setups in one. I just didn't like the fact that it is inside bar of this bar, and also you can make a case for downtrend still being in play. You know, if you took this, I can see why your stop loss goes one tick below the signal bar when you're buying and one tick above the signal bar when you're selling. And notice what you have now. You have high-low confirmation setup of the second entry long and a failed second entry short, and the uptrend is to get new high. And I was contemplating taking this setup. What stopped me from taking a setup like this is the inside bar, because this is inside bar of this bearish bar. But I definitely want to try market as more aggressive and more advanced because I really felt it's going to work, because now it's confirming the two-legged pullback, second entry long, failed second entry short. EMA keeps holding here, here, and here. It really feels like you're going to get new high. The bears are going to get trapped. You're with the direction of main trend. So I'm a little bit bummed I didn't pull the trigger here because the risk is not that big. But you know, it's one of those more aggressive setups. But as you can see, the prices continue working higher. Created a new extreme. So this means I have to be pausing, looking to go long. Okay, this was steep trend, break, two legs to a new extreme. First leg up, break, second leg up. I cannot go long here. We played out the bullish momentum. We have a new high, first entry long, pull back, second entry long. We have a failed second entry long, which is a reversal pattern. You don't want to be selling. If you want to sell, you want to see market confirming your idea, at least in the form of a failed second entry long reversal pattern. And this is the failed second entry long. Now, notice how bullish the bias is. This is quite strong bullish bias. You're also failing the breakout above the trend range. You know, if this bar on your chart is much bigger, I recommend avoiding this. But since this bar is so tiny, you can't take a chance. Trading is about taking a chance, calculated risk, especially if you're a swing trader, because I know a lot of traders who are watching me there using the same entry points, but they're going for much bigger targets. So this is one of those trades where you can consider swinging because the risk is so small and you're betting the market is going to go all the way down here because you have two legs to an extreme and you have failed breakout above the trend range. Okay, Market keeps trending lower. So at this point, what am I thinking? I have a break new low, so I gotta be patient. Don't want to go long, uptrend played out. Don't want to go short. And we keep breaking lower, and notice how far we are trading. Given the fact that the uptrend played out with 2 breaks and new extreme, 2 legs to new extreme, and the support was not really respected here, it makes sense for market to reverse. So I'm going to redraw the Y of the channel, but I'm going to look for how EMA reacts. If you're not sure, just wait for EMA reaction. I'm treating this as a downtrend is getting quite confirmed. It fits fairly well. What I need to see is a second entry short at the EMA. I have a new low, first entry short, second entry short, but the second entry short on my chart is so far away from EMA, can't really take it. It ended up working, but you know, it's not perfectly at the EMA. You're very close to creating a new low according to rules. You can see there's a trend line rule, but it didn't reach the new low quite yet. Same thing for failed second entry long. I cannot take it because it's so far from EMA, and especially if you're very close to creating micro double bottom like this. So there is not enough room. I don't want to take it. Still micro double bottom. Okay, we have a good bearish bar rejection, and notice what is forming. We have one top, double top. I'm going to redraw the shorten uptrend like this. And once I see double top forming and I can see EMA rejecting, am I thinking about reversal? We don't quite have a new low yet. And since this uptrend played out, given the EMA rejections and possible resistance, I'm leaning more bearish. Since this was the lowest low, this is where we're setting the count. We have a first entry short. If we get a second entry short outside of this trend line, I'm going to consider this. And notice you ticked higher, reverse down, and all the early bulls are trapped, and it's forming the triple test. One top, double top, triple test. Great tier 1 signal bar off the resistance, off the EMA, and this is a great high probability setup. Second entry short combined with the triple test. I wanted to take this setup. I dropped my limit order, but if you're watching this today, you can see it dropped fast within like 2 seconds. It never came back to fill you. So one of those trades where unfortunately, unless you use a stop order, you're getting left behind, which is just part of trading. You can't really get upset about this. Sometimes you catch it perfectly, and sometimes you may use limit order and get exactly the scalp before the reverses. So, you know, it will all evens out, but it's a little bit bummer when it happens, but you can't really get that into your head. But it's a great second entry short, and you don't have to have a new extreme precisely, because the fact that you have a break attempt and you have the triple test with the EMA, that's allowing you to trust the second entry short now, and you finally create a new extreme for the downtrend. So I'm pausing my short setups because the bear downtrend played out. I cannot go short here. Little breakout pullback, yes, but we just had a new extreme. You know, we can have stronger correction, but notice what is happening. We are pulling back, new low first entry short. We don't even get a second entry short, and market keeps trending lower, and notice how far you're trading. This tiny channel cannot take into consideration this entire price action. So this is a sign that there's probably a wider channel. So I'm just going to look for wider channel. You can see the second swing will set up the trend line, and third swing will confirm it. So after I see this, I can trust this downtrend. So at this point, what am I looking for is a two-legged pullback, at least to EMA, preferably to the trend line. I cannot really sell so far away from EMA, so I'm just going to be watching this carefully. And we're only creating first entries. You can see not giving me a high probability way to enter. Another first entry short. Okay, we're correcting, so I'm going to redraw the short and uptrend. Let's see. Okay, we're closing outside, attempting to create new high, which, given how strong the downtrend is, I can consider this as played out, but let's see what's going to happen. Okay, we're pushing below EMA. So at this point, this is a new low, first entry short, second entry short. But I cannot really take it because the uptrend doesn't have new high. You have no key entry point, very aggressive. So in order for me to capitalize on this structure and expecting new low according to trendline rule, I want to see lower high confirmation setup. If the lower high is going to form bad, I want to see failed second entry long. It's all going to depend if there's a perfect lower high right below the EMA near it, that's good. If you have to chase the lower high, far away from EMA, then you would consider failed second entry long. But notice nothing is forming, market is just dropping. And you can see by the time you get some setup, you actually created new extreme, so you can't even consider this at this point. So unfortunately, no way for me to take it, just drop lower, and I'm pausing my short setups, but notice what is happening. Another rejection down. You have to ask yourself, is this market reacting as it has new extreme? It's not, because you cannot even break the EMA, let alone reverse the market. So this is giving me confidence, and you can see another first entry short. So this market is way more bearish than expected. I was even thinking about drawing a possible downtrend like this, but you don't want to jump ahead of yourself too much. This is just some variation that you can look for, but hopefully you understand that after break new low, you would expect at least push above EMA. The fact that EMA rejects is here, 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 and here tells you, okay, the market is more bearish, and even if you have new extreme, I'm not really thinking about reversing the market just yet. This is way too strong. Minimal bullish pullbacks. We have a first entry short, second entry short. We're pushing below EMA, and since the market is so bearish, and we have a second entry short, what am I expecting? The same thing I was expecting here. Lower high or failed second entry long. By the time I get lower high, I'm so far from EMA, so close to these lows, I can't take it. And you can see horrible failed second entry long, way too far down. So once again, market dropped here, unfortunately not offering me to take any high probability setup. And at this point, we can see it's getting too late. So you can see there is a reason to price movement, bearish imbalance in the strength range. This is horrible, no trade zone. And if you're patient and sitting on your hands throughout this area, eventually you can see downtrend with the break new low, uptrend with the break new high, and a downtrend with the break new low, following the trend line rule precisely. And if you're feeling flustered throughout this area, just take small breaks. Stand up, take a walk around your office so you don't have to force yourself to stare at this. It's very important for you to not do something bad and be too emotional, getting tempted to take a setup like this in a structure like this. So I hope you had a decent trading day. I'm going to wrap it up. I'm going to talk to you next time. Good luck with your trading.